Welcome back, YouTube. So today we're going to be talking about Dogecoin, searching for its next pool of liquidity and possibly building its floor, or at least starting to right now. Now, if you were looking at just some previous technical analysis and getting some ideas of where the pools of liquidity are, you think that we would have had a steeper pullback now, but the good news just keeps coming for Doge, and it's giving it a lot of reasons to not have a steep pullback. Now, I'm not saying that it won't happen, but it's giving it a lot of reasons to find liquidity and to establish a floor a lot higher than what it normally would. So this is really good here. If you don't know, Elon Musk was named. He's going to be leading one of the departments, Department of Government Efficiency. That's a huge catalyst. Potentially opening up more doors here, and possibly this is giving it a lot of reasons to even be just really making Doge mainstream, right? And you can see some of the things he shared today, even just abbreviating the department Doge, which it technically stands for. So this is just opening up a lot of avenues and obviously additional chances for it to be used as a currency, because the more you see things, the more acceptable it becomes to you. So now you're thinking the viewpoint of Doge is going to be in front of people who may not necessarily even be into crypto. They're seeing it now on X and they're getting familiar with things. So it's really just an opportunity for the community to grow. And I think that's why we're seeing this very, I'm not going to say stubborn here, but if you take a look here, it wanted to pull back yesterday, right? So take a look here at this wick. We were down to around 35 cents from a high of 43 cents yesterday, right? On the daily candle, right? And the buying pressure literally just came in and made us and forced this candle to close at around 38, 39 cents, right? And even today, we're starting this new candle here. It's red. That's why I say this is the potential of us building out this floor, but it's a very tiny candle here because of the buying order. The buy orders are still coming in, able to pull this up. Now, the beauty of building out a floor, it doesn't necessarily have to be these huge candles, right? It just means that there's going to be a moment in time where we have some sideways action here, and we're building a meeting between buyers and sellers, right? So even if it's here, let's say we do this for a few days or something like that. We've built a floor at a really high level compared to previous trends. And this would be considered, this level, our launching pad for the next leg up compared to if it were lower, right? Because you can also have a floor down here, which is 33 cents, which is going to be 7 cents lower, but your launching pad for the next leg is also going to be that much lower. So in theory, well, not even in theory, but it's easier to hit those higher numbers, the higher that pool of liquidity is going to be for that particular leg. So this is something here that we're going to be watching to see how this floor is going to shape up, and that's going to give us the trajectory that we need to go and grab that liquidity that we have down here and establish that meeting between buyers and sellers, and also attack some of those higher numbers here and get over that $0.50. Because the truth of the matter is, once we close above 45 cents, we enter into others gap zones. And that's one thing we talked about at around 35 cents to 45. That was a gap zone, and that fulfilled itself. And it's something even more aggressive than the last one, which is that 45. So I think it goes to like 53 cents, just going off memory here. So it opens up a lot of doors going into those zones. And what you want a floor as close to, I'd say as close to 45 cents as possible. That puts us in the best position to go attack some of those higher numbers here and break through some of those walls. Because versus last time, I think we were grabbing liquidity from, because we went to, what is this, 46 cent, and we were grabbing liquidity from, what is this? This is 15 cents, and we had some, yeah, that's how huge these swings were, right? 15 to 20 cents, right? So we're going down 100, 150% to do these retests. Because even we came back here on June 3rd, we're running from a low of 20 cents to go to 46. So we're having to dip down over 100% to grab liquidity for those retests, right? Now imagine if we're in that same scenario with the volume coming in, but we don't have to go down to 20 cents or 15 cents to grab liquidity. Imagine if we're breaking above that zone, so we're going to 46 cents, 50 cents, and we're just grabbing liquidity from 39 cents, 45 cents, right? That upward swing, because we did get the momentum after we went down that low, we did get the momentum to increase 150% again. But imagine that increasing 150% from these levels, right? From 42 cents, right? So now we're tapping on a dollar's door with that, so just with similar momentum from what we had last time, because we're not necessarily grabbing that liquidity from such a low point. And also, you're not taking the wind out of the sails by those huge drops as well, because a 20% drop to grab liquidity and then run is a lot more susceptible to the movement and the tone of the community, and really just the movement and what's the word I'm looking for? That's the speed, the momentum behind the movement here is going to be a lot more susceptible to accepting 20% drops versus 150, right? So I think this is going to be a great position for us. I'd love to see us establish the support in this zone. Obviously, it's really early, but I wanted to point this out because it's something that we've been talking about over the last few days. And I think it's going to be beneficial for us to do this now versus later, because you don't want to be in a position where because right now, if we establish this floor, we're doing it from a place of strength, right? Because there is continuous news coming out for Dogecoin, there's continuous press coming out for Dogecoin. This happening now would be doing it from a place of strength versus Doge runs as far as it can and it's exhausted, and there's no news coming out, and the funds are exhausted, the institutions aren't investing any more money, people are taking profits. Now there's that scramble here, and this is how you get those wide swings and those huge sell-offs, because the pool liquidity where people are going to deem it a great value is going to be a lot lower, not to mention the people that are already in profit who purchase down here, they're going to start selling. So it causes a lot of issues here that we can avoid initially here if we build out these floors at a higher level and do it sooner versus later. So I'm loving what I'm seeing right now. Second thing I wanted to mention is the fact that we did get the golden cross here between the 72 and the 200. That's this orange line is the 72. The 200 is this red. We got this golden cross here. Remember, it's a much stronger signal than the 14, which is this yellow line crossing the 200, this red one here. So we're getting much stronger signals here to the upside here, giving you indicators of the current trend. If this is anything similar to what we saw here, because if you look at this here, when we had the 14 cross the 200, Doge was at 12 cents, right? Or about 13 cents, right? And we see the momentum that we have here. And then when we had let's see here, the 72 crossed the 200, Doge was at 27 cents, right? So the last time we had a weaker indicator cross this zone here, doing a golden cross, we got around 110, 115% increase, right? So if that is any indicator what's to happen here, this is a huge signal here for the upside. Now, again, it doesn't necessarily have to be immediate. I don't want to put that out there. We can see a consolidation or a building out of floor here just to grab some liquidity. I think that obviously for reasons I just mentioned, that would be best. But overall, the trend you see here is going to be up. So same thing, if you take a look here, we got this cross on, what is this, October 25th between the 14 and the 200. And we did have some red here. We grabbed some liquidity. We even used the 14 as support. But you'll see here, even with the red days here, the overall trend was up, right? So starting on October 30th through November 3rd, we were in a downtrend, and we used the 14-day as support. But the overall trend was up. So just wanted to put that out there, that even if we do see some red here, build out a place of, that meeting between buyers and sellers, it's not necessarily saying that it's over or we've already hit peak bull run. It's really a healthy part of a trend here as we established where that next leg is going to come from and how strong it's going to be to the upside. So overall, I'm loving everything I'm seeing right now. Everything is looking absolutely fantastic. Looks like we're starting out to get this floor here. So it's something we're going to be monitoring. Tomorrow, we're going to take a deeper dive into some of the macros, and we're going to talk about some higher target and time frames. And we're going to really take a deep dive in here to kind of see what are the projections here. What's the likelihood that we're going to hit some of these numbers, some higher targets? I look forward to discussing all of that with you guys. Thank you to all the new subscribers. Thank you to everyone that's been here the last few years. Continue sharing, liking the video. We're going to try and hit 100,000 subscribers this season. So please continue to share and subscribe if you have not. If you found value, let me know your thoughts in the comment section, and I'll see you guys in the next video.